Hey traders, Dennis Wilburn, the Active Trend Trader. Welcome to today's session of On the Radar. I have shocking news for you today. You are going to have losing trades when you're trading. But you know, how you handle your losses and how it will basically help you handle your winners better. We're going to get into the win-loss ratio today and what it means and why it's important to you as a trader, especially if you're just a beginning trader. Got a couple of stocks to take a look at, and also the analysis of the overall market. Looking kind of ugly out there as we slip away from the last rally attempt. So let's go ahead and jump into today's session right now. So as we see here, here's the S&P. What's going on with the S&P? As you can see, price actions hit a high here on the 29th of March, and then it basically done a sell-off. What this appeared initially like it was just going to be a nice little easy bull flag. However, it had a rebound on Monday and then an immediate reversal and sell-off on Tuesday. That is not a good omen for the markets. What else can we take away from this? Well, one, price actions fell below the 200-day moving average, and yes, they are still being supported by the 50, but it is back below the 200. Oftentimes, that's the precursor for additional downside. What else is going on that we need to be aware of here? Well, one, momentum on the daily chart has crossed to the downside. Also, market forecast momentum is crossing to the downside, and MACD may also cross to the downside. When those three things happen, oftentimes it spells more downside drops. What's the potential projection for that? I would look at the bottom of the fib box that you see highlighted when it pops up right there, and that's down there about 436, all the way down to, I go down to this body right here at about $430. That's where I would say, put yourself an alert at 433 and another one at 430 if you want to be trading the S&P. And you can also look towards trading the UPRO with that on a bounce back up. On the flip side of that, once we fail and close below the 50, I'll be looking for potential downside trades. And you could be trading either SPXU, that's the leveraged inverse ETF, or doing option trades to the downside on the spiders. So that's one. What else we got going on here? The NASDAQ also gaps down. So one of the things that the traders need to be aware of, this gap down window or falling window, that results now in a level of resistance. And it turns out that halfway up in that window is the strongest level of resistance, which is sitting about 358. As you see, price actions today didn't close totally at the low. Good sign that it stopped at the top of the Fibonacci, magic Fibonacci box. However, we closed below the 50 and we closed below the 20. And tomorrow we could see some kind of a little bounce back up here, but TSI crossed over, market forecast is crossing over, and the MACD also crossing over. And go back in time, especially when you're looking at the MACD, what has happened when the MACD has crossed over in the past? Well, as you can see, go back and you just look at these. What's happened is the price action tends to be retarded at that point, or slowed down, or even sometimes thwarted completely with big fall, gaps down and moves down. Let me do this. There we go. So again, I'm looking at similar type pattern. It's just different price levels. So we know we've got price level right there right at the Keltner channel, 339. another one down here at about 332. So that's the levels that I would be looking at for a potential reversal and move back up on the Qs. What about the Russell? Russell had so much promise a couple of days ago. Now it's looking like it wants to go back and retest down at these lows here. And that's where you need to be aware of what is the structure of the entity you're watching. And when I say structure, where is it likely to find strong support and or run into resistance? As we see from as it pushed back up into last year's trading zone, it failed. It failed on this day here, which was the 30th, which I believe was last Wednesday, and then has continued to move down, retested, and fell. It is back down below all the moving averages now, so there really is nothing in the way of it falling all the way down to, well, 192. All the way down to approximately 187.92. I think that's about, right there. And watch your TSI, watch your market forecast, watch your MACD. So all slanted towards the downside. Take a real quick look over here at the weekly chart on this. If prices close to where they are right now on the IWM, we have a bearish engulfing. And so that would be basically a bearish engulfing, which is a bearish reversal signal. And we could basically take that as a signal that, hey, we're going to go for some more downside. And then we have to make up a determination whether or not we would like to trade TZA, which is the leverage ETF to the downside, or do some put options or bearish options on there we go. On IWM. So that's what we've got with the indexes. Again, Russell likes to trade in these little 10% ranges, and so when you switch over to TNA or TZA, those same ranges turn out to be 30%. So I'll let you do the math about how you could potentially make that compound for you, even if you're only picking up about half of the potential move there. So let's see what else we have here. A couple of stocks I want to take a look at real quick, but first, let's take a look at the VIX. The VIX basically started to make a move from these lows right here. It got into the support range and started to push back up. What does the daily chart look like? Well, VIX pushed all the way up to the 50, and again, it trades in a range. So it broke the downtrend line and it started to move up. So, what's going to happen with VIX? Good news would probably drive the VIX back down and drive the market up. More continuous headwinds, inflationary issues, the Fed raising rates faster than what was anticipated could basically push volatility back up to its old highs also. So where is it of interest to me? It is of interest to me when it gets up there. I'm going to basically say somewhere between $33 and all the way up to $37, or down at the lows of around 19, all the way down to 1672. So at this particular point, we don't use the VIX to actually trigger into particular trades, although some people do like to trade the VIX, because all you have to do is pay attention to the technicals on it. But it does give us a convergence of clues about what may be transpiring. So that's that one. The other one, now here's three stocks to take a real hard look at. One, Google. Google broke down the day it has earnings coming up here on the 26th. I'm liking Google. In other words, it broke down on slightly increasing volume below the 50, but it gapped down. It gapped down below the 200. And so what I'd be looking at on Google is to try to trade probably a bear put spread. That would be a debit spread or a bear call spread. but you may want to wait for it to get back up a little bit closer to, I would say, if it gets up closer to the 200-day moving average at 276 to 2765. That would be a potential to do the 2765 by 2760 bear put spread. Bear put spread. Again, that is a debit spread. So that's one of the things that I'm looking at. I would go out probably about 2 weeks on that, simply because we have earnings coming up the latter part of the week of the 26th. One of our hero stocks, of course, Palo Alto Networks, Palo Alto Networks is actually looking pretty good. It's holding up better than the rest of the market, so you may want to pay attention to that. Coming back to retest a breakout area. But the ones I wanted to highlight today was NVIDIA. NVIDIA, same type of situation. The TSI has crossed over, market forecast has crossed over, and the MACD has crossed over. The last time that this happened, the question you have to ask is, will the potential move be tradable, or do I just want to hang on? Hang on until we get down into the structure of in the structure of support, which in this case is down in this area here. Let's draw that across here. I'm probably going to have to draw in change that color. As you can see, I'm doing a different color. I'm trying a different color aspect on my, there we go, for the time, I don't want that. Let's edit that one more time. Go here to color, go more. That's okay. Let's go here. Let's make it a little bit more transparent. There we go. Let's see how that works. There we go. Yeah, it's much better. So looking for a pullback down into this area. This is where the structure of support is. And so just lay in some alerts down there. And we don't care if that alert takes a week from now, 2 weeks from now, 3 weeks from now. But when it goes off, that's when we may get our bounce to the upside, or that's where it would be more likely to rebound. As you can see, especially when you're putting the kind of candles here that are dropping to the downside. And we've had 1, 2, 3, 4 hits where that support held. And if you look further to the left, you also found some levels over here where that level of support held. So that's the one other stock that we're looking at. And then last but not least, I want to also remind us about Tesla. Tesla is, here's the weekly chart. TSI heading up, market forecast heading up, and also MACD heading up. What about the dailies, though? Daily cross back down to the downside. But so where's it likely to go? Well, we've got a break. It's testing in the middle of this gap up window right here. This gap up window right here. It's testing in the middle of that. Watch for it off of the 20. Watch for it off the 20, or even down into this fib box right here. Off the 50-day moving average. That would not be a surprising place for Tesla to want to turn around. So for right now with Tesla, its support structure is down here in that magic fib box. I like it. Like I said, I like it at the 947 level. And of course, with Tesla, it could reverse almost immediately and just start running back up tomorrow. But at this particular point, until we close below the 50-day moving average, I'm not looking to take a downside trade in Tesla yet. There we go. Let me go back to my chart. So anyway, okay, so that's where we're sitting with those. If you will, do me a favor and let me know what you think about this darker background. To me, it makes it a little bit easier to see everything and what's going on and where the ticks are. But you tell me what you think on that. So with that, let's go ahead and jump over to, oh, there's one other thing on the, to be paying attention to, and it is this indicator right here. This is off barchart.com. And one of the things that I watch a lot is I watch this, the percentage of stocks above the 20-day moving average. When it's up here in the highs, it doesn't spend much time above 75. At the same time, the real triggering aspect of this is when it gets down below 30 here. As you can see, we've had a pretty good failure to the downside with today's candlestick. And we've already had 1, 2, 3 since December. 1, 2, 3, 4, almost 5 different ventures down into below 30 level. The lower it goes, often the stronger the rebound. And so something to keep in mind. I don't trade off of this, but again, it's a convergence of clue issue like the VIX. I want to be aware of where it's at, and then it helps me posture myself for when to start taking long trades, and or tells me, hey, be patient and wait. It's not ready yet. And so our tip for today, let's go ahead and jump on our tip for today. And it has to do, what does the win-loss ratio tell you? What is the win-loss ratio? This is one of the things that you should be recording at, and if you back-tested your system, which I hope you did, I know with the active trend trading system and the AutoPilot trading system, we have back-tested that. We know what its parameters are. We know how well it performed in backtesting. We know how well it's performed over the last 10 years that we've been using it. So what does it tell us? It gives us probability parameters based on backtesting and live trading. So what does that mean? Well, it tells me that every time I place an order, it lets me know that I am hitting somewhere between 60 and 65%, if not better. Sometimes it's up to 75%, winning trades to losing trades. Winning trades to losing trades. I want a win-loss ratio of better than 60% or 60% and better. Why is that? Well, one of the reasons is because Grabowski says, and he was the guy who did all the statistical information on candlestick patterns and also chart patterns. He basically said if you're hitting a win-loss ratio of better than 60 or better than 65%, it shows that your system has an edge. It shows it has an edge. It's basically greater than, the probability is greater than just flipping a coin, which is what we want. And the reason, so that explains the reason why. What else? Here's the shocker. You will lose money trading. Why? Well, if I'm hitting a 60% win-loss ratio, it means out of 10 trades, I should win about 6 and lose about 4. Now, the way probabilities work, of course, is the larger the larger the number of samples that I have, the population of data. There will be times when I could go 6, 7, 8, 9, 10 trades and turn out to be a loss. However, if I'm following my rules, doing what I needed to be doing for the system, as I add more trades to it, the system should come back into the mean of what it backtested at. So I want to also be looking at pairing this with a profit-loss ratio. And if my profit-loss ratio is greater than 2 to 1, in other words, for every dollar I risk, I can gain $2, then in reality, even if I only win 50% of the time, my system should be making money. and we'll save that for our next session. So what you must do, you should be making money if you follow your rules. And next time I will get into why the profit and loss is important. In other words, why is it important to know that I am risking $1 to gain $2? And then also, what's the expectancy of that particular trade? So until next time, hey, aloha, God bless. If you have any questions, drop them in the comments there on the YouTube channel. Please share my videos with other traders who would like, who are maybe just getting started, or maybe traders who can provide us some additional information. Always looking to learn and get better. And so have a great rest of your week. And we'll be looking for you next week. We'll be talking about why profit and loss ratio is important. So aloha. God bless everybody.